We are live from Bloomberg's world headquarters in Midtown Manhattan, streaming on Twitter and on Facebook. I'm Matt Miller.
And I'm Kailey Leinz. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance.
Coming up, the bear case for crypto, for digital gold. Skeptic James Rickards joins us to debate Bitcoin's utility and longevity.
And two federal watchdogs that once held back are now front and center in the crypto regulation game. We'll discuss with Perianne Boring of the Chamber of Digital Commerce.
Plus, Goldman Sachs teams up with Galaxy Digital. Details on the latest move by Wall Street to embrace digital assets.
So we will have details on those moves coming up, but first let's get you up to date with the moves we are seeing across digital assets. The best way to do that on your Bloomberg terminal is CRYP Go. That will be your function, but here is a little snapshot for you. Basically, what you need to know is digital coins are moving upward today in tandem with risk assets. Bitcoin is up about 3.3%. We're trading in and around 42,500, so roughly in the same range we've been in all year, though on the higher end of it. You're also seeing Ether up by about 3%. We're just below 3,000. What's interesting is for the last week or so, you've actually seen Ether outperforming Bitcoin rather dramatically. There's a lot of anticipation building about the upcoming upgrade to the Ethereum blockchain. The merge, a lot of optimism around that. Finally, I would just note, while you're seeing the digital coins in the green today, you're seeing a corresponding move in some of those crypto-related equities. Marathon Digital and Riot Blockchain higher by about 8.4% and 5.5%, respectively, Matt.
Of course, Bitcoin is still the big behemoth among the coins. I'm old enough to remember when it cost less than an ounce of gold to buy one Bitcoin. You can see from this chart that going back to 2019, it's cost roughly 5 ounces of gold to buy one Bitcoin. And then as we hit the pandemic, the price shot up. Of course, we topped $65,000 per Bitcoin, and we went up to about 35 ounces of gold. Right now, we're trading at 22 ounces of gold. That's how much you'll pay for one Bitcoin in gold terms. Billionaire investor Mike Novogratz made the bullish case for the digital currency on our debut show last week.
I think Bitcoin has this really beautiful lane of being digital gold or a store of value. If you don't trust your government's currency, traditionally we put it in diamonds or gold. This is the first really digital version of that. The whole world's not going to flip to Bitcoin overnight, but you're going to see more and more people say, I want to have some of my money outside of the sovereign. Bitcoin is a lifeline to people in countries with really poor stewardship of their economy. And we should be thrilled that Russians can get some of their money in Bitcoin so they're not completely broke holding worthless rubles.
That was investor Mike Novogratz with his view. Now let's get the counter opinion and bring in notable crypto skeptic, the author of several books, including The New Great Depression, and the editor of financial newsletter Strategic Intelligence, James Rickards. He is joining us here in our New York studio. Jim, thank you so much for being here. You obviously have been skeptical on cryptocurrencies for some time. Given the evolution in just the last month, the war in Ukraine, the resulting sanctions on Russia, have you changed your view at all?
I wouldn't say I'm skeptical on cryptocurrencies. I would say that the thing with cryptocurrencies, people debate, is it money or not? Is Bitcoin money or is it not money? I would ask you a different question. If Bitcoin is money, what does that say about the definition of money? And I think that's the revolution here. Bitcoin is a medium. It's like television or radio or the computer, anything that came along. It disrupts things, obviously. But one of the things, what it's disrupting is the definition of money. So I think we're actually at the point where we've lost the thread. So, the Fed has always said, M0, M1, M2. They don't even know what money is because they have 3 different definitions. Throw in, gold, silver, crypto, central bank digital currencies, Bitcoin, et cetera. I saw the most recent academic research on this. A couple scholars did a great job. And they identified 40 different characteristics of money. The classic is unit of account, store of value, medium of exchange. They had 40 characteristics. Is it good for anti-money laundering or not? Is it good for tax evasion or not? Is it anonymous or not, et cetera, across 15 different kinds of money. So there was a matrix of 600 blocks that you could check the box, does it or does it not have that characteristic?
But you do think it's money, don't you? I mean, you think Bitcoin is as much money as is gold without the track record, right?
I would say there's something much bigger going on, Matt. That it's, the old saying, we don't know who discovered water, but we're pretty sure it wasn't a fish because the fish is in the water. You have to take the fish out of the water and go, where's the water? We're in an electronic environment. It has now come to money. It's already affected other kinds of medium. So we actually, there's moneyness. There's some characteristics of money, but I just described a 600 box matrix. sort of name your own money. So we've lost the thread as to what money actually is.
Well, how much do you think investors should be willing to put into digital currencies, especially as we watch, and Kailey was, I think, referring to kind of a de-dollarization. Not that we have floated away completely from the idea of dollar as world reserve currency, or we will in decades, but we've gotten a taste of that from this war in Ukraine.
Yeah, I would separate the reserve currency role from the idea of is the dollar sound money. That goes back to what I was saying before. I think we've lost the thread. We actually don't know what money is right now. As far as the reserve currency is concerned, people, it's not like the People's Bank of China has pallets of $100 bills in the basement. They don't. What people mean is you have to invest in something. There has to be a bond market denominated in dollars so that the dollar is the numeraire. But you need a bond market. There is no Bitcoin bond market. There's a nascent one, but not really. There's actually no Chinese yuan bond market. So those things can't be reserve currencies because there's nothing to invest in. You can exchange, it's tradable, you can buy stuff with it, but you can't really invest in anything. So I think that the dollar could be the reserve currency, but I'm pointing to a larger issue, which is people are going to go in 50 different directions in terms of what money is. It's not surprising that younger people took to Bitcoin. You look at the, not so much how much they own, but by what percentage of each 10-year tranche owns Bitcoin. And it's much, much higher for millennials and Generation Z. But if you think about it, when they were 5 years old, what were they doing? Playing video games. They're playing video games.
Right, raised in a digital world, you might say.
Not just a digital world, but a digital world with digital money in it, because that's how the game makers make money. You pay real dollars, and they give you some digital coins. You can buy some more armies or whatever. So when Bitcoin came along, it wasn't odd to them.
It's not, no, and I know people who mined it on their Nintendos back in the day, but you do see people in countries or civilizations where the currency has collapsed investing in Bitcoin, in Venezuela, in Zimbabwe, maybe in Russia and Ukraine. Do you think that's the wrong idea?
First of all, if you're in distress, you're a refugee, you're in a war zone, cryptocurrencies, including Bitcoin, have a role just to get your money out. I was talking to a guy who was in the Serbian war. He said, we wanted gold, we couldn't find it. We wanted euros, we couldn't find it. Certainly no dollars. So what they did, they emptied their septic tanks and filled them with gasoline because it was a store of value. So people will do whatever it takes to get a store of value. So that's useful. But in the world, there are no investors in Bitcoin because it's not an investment. It is an asset.
Is it a hedge? Can it be a hedge?
No, because it bears no relationship. It goes up and down. I mean, it could go to 100,000, it could go to 2,000. I don't know where it's going to go. I know it could go either way. The best analogy, it's like going to a casino. I put some money down the roulette table, I get a chip. Now, that's an asset. It has value. And I could walk out with a lot more or lose it. So it goes up and down, has an asset, has value, but no one thinks it's an investment. It's a casino chip. So it's a form of gambling. And, a lot of people enjoy it. I know, for example, there's a cryptocurrency called High Street. Ticker is High. So it was trading around $3. The other day it went to $16 for a minute, and then it went down to $6. So, up from 3 to 6, that's still good. But what was that $16 spike? Fat finger? I have no idea what caused it, but with something like that, that's not exactly an investment.
All right. Well, it'll be interesting to see if your views change as we get more and more regulation, and as more of Wall Street accepts this, institutions. It looks like it's happening right now. In any case, Jim, great to have you on the program. Thanks so much for joining us. Jim Rickards, editor of Strategic Intelligence and author of several books, including The New Great Depression. Coming up, crypto under scrutiny. We'll speak with Perianne Boring, head of the world's leading trade association representing the digital asset and blockchain industries.
Plus, Goldman's over-the-counter crypto options trade, how the bank is expanding its digital asset offerings.
And to access all of the latest data and news on crypto on your Bloomberg terminal, just type CRYP Go. This is Bloomberg.
This is Bloomberg Crypto. I'm Kailey Leinz with Matt Miller at our world headquarters in New York. And Matt, we were just talking to Jim Rickards. And one thing that you raised that we didn't get to speak with Jim is regulation. So let's get to that issue now. President Biden's crypto executive order has put the nation's two federal consumer protection regulators front and center in regulating digital money. Let's get more with Allison Vershprill, our crypto regulation reporter down in Washington, D.C. So, Allison, first let's talk about the task. What did President Biden's executive order give to regulators like the Federal Trade Commission and the Consumer Financial Protection Bureau?
So the executive order tasked, federal agencies across the board, dozens of them, with studying a range of issues. And, with these consumer watchdog agencies like the Consumer Financial Protection Bureau and the Federal Trade Commission, he specifically asked them to look at any consumer protection issues. He wanted them to look at changes to the financial market infrastructure and payment structure and, circumstances that could lead to mass adoption and, what that means for user privacy. So there's a lot that they're going to be looking at. And it's important because, we haven't seen, when we talk about crypto, we always think of the Securities and Exchange Commission. And so it's bringing some of these other agencies into the conversation.
Yeah, well, definitely important for this industry. Allison, has either regulator indicated where it might focus its efforts?
So we have seen, even before the executive order, we saw this director of the CFPB talking a lot about his interest in what big tech companies were doing in the crypto space, if they were planning on, adopting this into some of the payment products that they have out there, because he feels like that's really going to be a path to mass adoption. And so he wants to look at what that means for consumers, what that means for privacy, and making sure that, people are protected in this space.
Allison, thanks so much for joining us. Allison Verspril there, our crypto regulation reporter out of Washington, D.C. Joining us now here in New York is Perianne Boring, founder and CEO of the Chamber of Digital Commerce. It's a trade association representing the digital asset and blockchain industries. Perianne, great to have you in the studio. Thanks for joining us. What's your hope for regulation? I mean, clearly there are going to be multiple agencies involved, and it's going to be very complex. How do you see it? How would you like to see it turn out?
So in 2019, the Chamber of Digital Commerce, we called for a national action plan for blockchain. So we have some gaps in the way the federal government has been approaching digital assets. First and foremost, we have a very fragmented approach to regulation with the SEC and the CFTC, and at Treasury, you have different approaches from FinCEN and OFAC and IRS. Congress is getting involved. You mentioned the consumer regulators, the FTC, the CFPB. There's a lot of stakeholders. There's a lot of cooks in the kitchen. So U.S. competitiveness has been one of the things that I thought was most promising that came out of that executive order.
Yeah.
It tasked the Commerce Department to ensure the U.S. can compete globally. So we need to have a strategy. We need to have a plan. We need to have a way that all these agencies can coordinate in a formal way so businesses know the rules to the road so they can compete on a global playing field.
So if you were making that plan, what would it look like?
Well, first, we need to recognize the critical importance of this technology. As Jim Rickards just stated, he said this is much bigger than what I think most of us can even comprehend. I believe this is the most important technology we will see in our lifetimes. Mark Andreessen has said it's just as important as the internet itself. So first, we need to recognize.
And Jim even said it himself. He said it's a medium like the computer.
Absolutely, it is. Yeah, absolutely. It's a technology and it's a tool, and it's going to have wide-reaching impacts for the financial sector, but also other industries. And we need to ensure that we have public policies in place that protects consumers, protects the financial system, all those things we all care about, but does not stifle innovation and further encourages the development of this technology here in the United States.
Well, and you at the Chamber of Digital Commerce have pointed out that accounting standards is one of the biggest barriers here. How do you go about fixing that or formulating that?
So we have called on the Financial Accounting Standards Board, the FASB, to issue accounting standards for digital assets. It seems like such a simple thing, but without having accounting standards, U.S. public and private businesses do not have the tools to make investments in cryptocurrencies and put them on their balance sheets. So the lack of having accounting standards has caused all these companies to treat them as indefinite-lived intangible assets, which is incredibly punitive to anyone putting Bitcoin or other digital assets on the balance sheet. So it's a simple fix. The FASB needs to issue accounting standards. They have taken comments from the public last year. They found at the end of last year, the board found that cryptocurrency is the #1 priority of their stakeholders. So the process is in place, but they do have to make that decision to go ahead and issue these standards, and we are encouraging them to do so.
Kailey and I were talking before the show about an issue that a lot of people raise on Bloomberg television the fact that China looks like it's more competitive than the U.S. right now in this space because they already have the digital yuan. When we talk, though, to Mike McGlone, Bloomberg Intelligence senior analyst for commodities, he says we have a digital dollar, too, in the form of Tether, and that makes us just as competitive or maybe more because it's the most traded digital currency. What do you think?
Great point. So we don't want to compete with China by trying to out-China the Chinese. We don't share the same values. We want to make sure that the rails that will be used to fuel our financial system globally is built with Western values. So I believe the way we win this race globally is to empower our private sector. There are many U.S. businesses that are regulated here in the United States that have issued digital dollars, and we should be finding ways to partner with them to ensure the U.S. dollar is extended in commerce globally in cyberspace and on blockchains.
Well, you talked about Western values. Let's talk about Western sanctions, because there is a narrative out there that cryptocurrencies can be used to circumvent that. We heard Christine Lagarde, the ECB president, talking about that very thing today, essentially saying, certainly as we speak, that is what is being done. This is something we've heard from Senator Elizabeth Warren as well. What would you say they are getting right or getting wrong?
Well, they're getting it wrong. Let's just debunk this, and let's look at the facts, and let's look at the data. So U.S. Treasury Undersecretary Nellie Lang just issued a statement where she said the transaction volume is so small that she does not believe that this could be a tool for widespread sanctions evasion. Cryptocurrencies.
But shouldn't it be someday? Isn't that kind of the point? We should be able to evade government censorship with Bitcoin. It's a libertarian currency.
There are laws, there are governments, they do exist, and they have the tools to track and trace all transactions happening on open blockchains like Bitcoin. This is not a good tool for bad actors, because law enforcement knows how to track and trace the money much more effectively than other forms of money like fiat or others. So we're not seeing any real transaction volume to evade sanctions. The top law enforcement agencies, even at the White House, within FinCEN, and at the FBI, have all made statements in the past couple of weeks saying they see crypto as a poor tool for sanctions evasion. And in the black markets, where that could potentially be happening, there's not enough transaction volume happening in those markets to do anything on a wide scale.
I wonder with which currency people evade sanctions the most.
I'll let you guess.
The U.S. dollar. Perianne Boring, thanks so much for joining us. Great having you in the studio.
So much,
she is the founder and CEO of the Chamber of Digital Commerce. Coming up, Goldman Sachs over-the-counter crypto options trade. More on how the bank is expanding its digital asset offerings next. This is Bloomberg.
Crypto has been one of the great stories in finance over the course of roughly the last 15 years. I still have my skepticism, but there are hundreds of millions of people in this world today who disagree with that. And so to the extent that we're trying to help institutions and investors solve their portfolio allocation problems, we have to give serious consideration to being a market maker in crypto. And I think it's fair to assume that over the months to come, you will see us engage in making markets in cryptocurrencies.
That was Citadel founder and CEO Ken Griffin. You can watch that full interview on Bloomberg Wealth with David Rubenstein tonight at 9 p.m. in New York. Well, while we're talking about institutional adoption in crypto assets, Goldman Sachs has executed its first over-the-counter crypto options trade. It's one step in the expansion of its digital asset offerings to Wall Street investors. For more, we're joined now by our contributor, Sonali Basak. So, Sonali, what does this mean more broadly speaking for the way the industry is adopting crypto?
Yeah, remember, Goldman Sachs was really one of the first to start building up this market for crypto derivatives, getting in early when it came to futures, getting in early when it came to NDFs, non-deliverable forwards in the currency market where it's popular, and then also now options trading. So you have them across the whole board. What does this go to say, Kailey? It goes to say that every day there is not a spot ETF for Bitcoin. Investors will look to different derivative options, which you're seeing Goldman facilitate here, Jane Street, and as you saw from that soundbite, potentially Ken Griffin's market maker in the future.
In the U.S., right? Because we have spot ETFs in Canada, as well as exchange-traded products and stuff. Listen, you sit across from me in the newsroom, so I hear you talking to the biggest players on Wall Street all day long. You're constantly working the phones. What do they tell you about institutional adoption of crypto? Or are they investing for their own P&Ls?
There's two things that are happening here. If you're investing in Bitcoin as a hedge fund, many people said we don't need these products, we can just go buy it ourselves. For the people that are not comfortable with the custody aspect, with the security that has to deal with Bitcoin, then yes, they do look to banks, they look to Galaxy, Genesis, and other firms that are offering derivatives that they can use. One note that I want to point out from Eric Balchunas here, how lucrative the crypto intermediary business is. $50 billion in fees over a 12-month period is 3 times as an ETF market maker. So there is really a lot of money to be made here. There's a lot of spread, as we know, and there is a lot of demand for clients in these different forms of products because that risk tolerance is different.
So what should we be watching for as potential next moves from Wall Street on this?
Well, interestingly, we talked about trading. The investment banking part is also interesting. This idea that you can be bigger when it comes to listing tokens, when it comes to raising money in different forms, whether it be in the NFT world, through the DAO world. Something we joke around a lot about is there going to be a BlackRock DAO? Because there's so many other investing DAOs that are formed. And wealth management, Kailey, a lot of people in the wealth management world, we saw Morgan Stanley, Matt, get into this business via their work with NYDIG or with Galaxy. But will a UBS, will a Credit Suisse get bigger into this space such that some of the wealthiest clients
Well, they have to, don't they? I mean, it's not a joke. You talk to businesses all the time about raising money in digital assets.
And that's the key question here. Do they have to? Right now, they look at it and they have a lot of fears. They're watching to see how certain SEC proposals come through, to see how certain, not regulatory matters, but enforcement matters, more importantly, come through. Because they want to see how money is used not just for the better, but also for the worse, as you're talking about.
All right, well, we're watching Blythe Masters SPAC go gangbusters right now. So obviously, investors are down to clown. Thank you very much, Sonali Basak, for joining us, our Wall Street reporter. Coming up next week, we're going to speak with Meltem Demir's Chief Strategy Officer at CoinShares. They have an ETP product. And Katie Stockton, founder of Fairlead Strategies.
She'll, of course, run us through the technicals, which we know are so important, especially for this asset class. So we'll be looking forward to getting her perspective next Tuesday, same time, same place, 1 p.m. Eastern time, right here on Bloomberg Television. This is Bloomberg.